Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your fee back and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, traders, and welcome back. Good to see everybody is in here early for some good news related trading. We've got some interesting stuff coming on the pipeline here this morning. Big stuff, actually. We have the core PCE number. This is set to move markets pretty substantially as if you're kind of newer to fundamentals and this is your first time coming on for a core PCE price index stream, it's not as flashy perhaps as an NFP or a CPI, but to me, this one is just as interesting because this is the Fed's preferred measure of inflation. They have been very transparent. They look at this because this is the more of a focus on the consumer, right? It's the expenditure of the consumer. And at the end of the day, it is the change in price of goods and services purchased by consumers, excluding food and energy. And the Fed has made this point many times. This is their preferred measurement of inflation. Okay. Now, if the Fed cares, you and I should care, because if the Fed cares and they set monetary policy, which will heavily cause the dollar, gold, currency pairs, the stock market indices to move, they're the ones setting that. And if they care, we should care too. Okay. So in this stream, what we are going to be doing is we've got 9 minutes to go. We're going to be reacting to the number as it hits the floor and seeing what it does to markets here as we get going today. So let me just be transparent. I'll start out with where I currently am positioned. I still have that pound dollar short that was on yesterday. This is still flat for me. Hasn't really made too much of a move. It's a very small position for me. So I'm really not, I'm not phased if it moves for or against me here, but I do like the setup. I'm still in this pound dollar short. And we will see how this one wants to play out. Let's take a quick look at the dollar index. Speaking of, if you're going to trade any dollar pairs today, be very careful as we go into the news. And let's get a read on where price action is at for the US dollar. In fact, let's start fresh here. We'll take a look at the daily chart first. The daily chart continues to chug higher. And I do think that this is overall price is supported here. Let me show you where we're at, guys. We've got the dollar index, which has yet again made a nice push through the highs. And despite kind of the bearish kind of mini trend that we had going on here, it does seem like the longer term trend is still intact and bulls are in control here, continuing to push this thing higher. So for me right now, the dollar index, the path of least resistance, is a move back to the previous highs on the daily chart. So I think we could see a move back up to this 107.2 level where we found resistance previously. Again, one of the main things that I pointed out about this is that the fact that we broke out of this little downward trend shows that the longer term bulls may want to continue to push this thing up. So far, that has been the case. And watch very closely with me here today, guys, to see if we can get that push back to the previous high for the dollar. Now, if you're somebody who trades currency pairs, think about how that might impact your trade. If I'm right about this, I guess I could totally be wrong, as always. I could be wrong, just like anybody could be wrong. The markets are not certain or 100% predictable by any means. We are acting on probabilities here. So I think path of least resistance, aka most likely, I think the dollar pushes up. And we'll see if that does turn out to be the case. Of course, that would be good for my pound dollar short, right? Because if I'm short, if I'm shorting GU, right, I'm betting against the pound and in favor of the US dollar. US economy still looks very strong overall. Again, that advanced GDP number that we had yesterday just continued to add flame to the fire, right? Gas to the flame, if you will. And that's following good, solid PMI numbers. The US looks, in my opinion, to be outperforming the other places, their major counterparts like Europe, etc. And yeah, what's with the headphones, Nick? It's because I have guests come on the show pretty frequently, so I have to be able to hear them. And it's you know, a little easier than playing desktop audio outside. So yes, I've got headphones in case I am joined by a guest. These streams, as you're familiar, I usually have, just depends the day, but we might have anywhere from 2 to 5 people rotate in to give their takes on the markets. And we'll see. I think we have Kenzo on the line here today. He's not quite here yet, but he will be. So stick around. We've got some other traders coming in to the mix. Now, short term, again, we've got 6 minutes to go. Short term for the dollar bulls. This is where we're currently at. We're stuck at this level of resistance on the daily. I want to drop it down with you guys to the 4-hour chart and highlight something, though. We've broken through this level. We've retested. And now, to me, again, path of least resistance here looks to be a move back to that green line that we marked on the daily chart, the previous high. We've broken through this level even on the 4-hour chart. We're now pulling back. This looks like a supportive zone for me. Now, again, I have a stop loss on my trade for a reason. Everybody who you see, you know, trading on social media, doesn't matter who, everybody is going to be right. They're going to be wrong sometimes. It's all about the long term, the longevity of this game. Are you going to win more than you're losing, or are you going to lose more than you're winning? And what are those winners going to look like? So I have a stop loss on my trade with the pound dollar for a reason. If the dollar fails out here, I need to be taken out of my trade, right? So dollar bullishness is either right if we make that move up, and it's wrong for me, right? Because I have my stop in place. I'm wrong if this level is invalidated. Okay, really simple on that. I'm not going to get too fancy with the technicals here. I keep technicals really simple. One of the big reasons here is that we do have a pound dollar reading here on the very bearish side of things. We're getting a -8. What the heck does a -8, Nick? What does that even mean? Well, we look at lots of factors here. What you're looking at is generated by our software, the A1 EDGEFINDER Pro, which allows traders to get a ton of market data simplified into a scoring algorithm, and it generates setups on our behalf. So I am bearish on the pound because I like the technical setup, but I also like the fundamentals. So if we take a look at, for example, the labor statistics in the US are so strong compared to the UK, right? We had that rock solid NFP this month here in October. You know, overall PMI numbers have been strong. We've seen a really strong US economy. And I think when you compare it to the UK, that makes the dollar look even stronger. So that's why I have, again, that pound dollar short. And I'm saying all this, I want to be clear. If this thing blasts through the highs, am I just an idiot? I mean, sometimes I am, don't get me wrong, but I don't necessarily think so. I think I have a good game plan here. I have a decent risk to reward. I'm set to make more than I lose if I'm right, and we'll see how that one plays out. I just want to remind you guys, if you're enjoying my streams here or the A1 Trading Show as a whole, please do me a quick favor and hit that thumbs up button, subscribe. We'll have more guests joining us here in just a bit to go through some markets. So if you're enjoying what we're putting out here, we put a lot of effort into these shows. Please do me a favor and hit that thumbs up button. Just show us some support here this morning. Again, we are coming in, guys, about 2 minutes out from what we've got today here in terms of core PCE. This is probably going to be the main market driver here. We do have revised U of M consumer sentiment. This is the University of Michigan putting out their consumer sentiment report here at 10 a.m. So that's going to be in about an hour and a half, which could also be market moving to US dollar pairs. So let me again, we covered the dollar. I've shared with you guys the pound situation that I've got. Let's take a quick look at gold from where we left off yesterday. So guys, in terms of gold, for the bulls, again, you could make a good case that we've made a break through that 1980 level. And it does seem like buyers are supporting this price very well. I don't want to spend too much time on gold because I know we're about to get dragged into the news. I will come back to gold and give a more complete view. But in the meantime, let's go ahead and set up our charts here so that we can watch the reaction to core PCE numbers, again, giving us an idea of what inflationary statistics are looking like this month. Well, it's really a key figure for the Fed. And so that is why, of course, we pay attention to it as well. I've got the NASDAQ in the top right. I've got gold in the top left here for you guys. If you want to keep an eye on your favorite chart, again, gold is going to be in the top left. The euro is going to be in the bottom left. And for the last one, I've got to put my pound USD idea up there, which, of course, like I said, I am short going into this news. I picked up this trade yesterday, so we will see how the news impacts. Again, we'll see, but we are coming in about 45 seconds here to go before core PCE gets going. Like I said, quick reminder, take half a second, hit that thumbs up button on the stream. It really would help us out here to get the word out, get this show seen by more traders who are looking for real day-to-day market setups. And hey, turn on that notification bell if you haven't already. Come join us each day. This is totally free to be here and hang out with us each day. And I hope I'm bringing some value to your day as a trader. So with that said, guys, we've got 20 seconds. Let's go ahead and hit that breaking news coming in hot for you. All right. Got to love the breaking news flash. Feels very, very CNBC like. Here we go. We got core PCE. Let's see what we get in terms of a number here this morning. All right, 8:30 on the buzzer here. Core PCE coming in and initially spiking slightly down for NAS. Pound dollar making a move lower. Euro dollar down. Again, a little bit of a blip here back and forth. Let's see what we've got in terms of number. There it is, 0.3% as expected. And guys, this is in some ways deflationary to the story. Right? Because this is, again, as long as this number is not hotter than expected, disinflationary trends could be set to continue, which has been part of my thesis for possibly being bullish NASDAQ, but I'm waiting for some signals there. In the meantime, I've got my eye on that pound dollar trade that I mentioned to you just moments ago. And again, a little bit of a blip here in terms of what this does, but let's talk about what this tells us, guys. Why does this matter to you? Even though the spike is not big, what does this tell the markets? It's actually really, really important that we talk about that because, again, PCE gives us an idea of what the consumer's inflationary statistics are looking like. And the Fed really, really cares about that because the Fed wants to maximize employment while keeping prices steady. Their idea of steady is at 2% inflation year over year. So this 0.3% coming in compared to the forecast of 0.3, it came in as expected. That's why we don't get a giant spike here this morning. However, markets are still moving quite a bit right now. You take a look at the VIX, it's hovering around 20, which a 20 VIX gives you a good volatile market across all domains, currencies, gold, futures, stocks, everything kind of moves a little bit more when you get that higher tick in the VIX. Well, right now you've got the pound dollar trading lower, which is nice. NASDAQ kind of correcting. I think that this is not actually bad at all for the NASDAQ. In fact, it might be bullish for the NASDAQ to get these disinflationary numbers. What about that story for the dollar though, Nick? What does that do to gold? What does it do to euro dollar and pound dollar? Well, it doesn't really massively change anything. We've had such a strong list of economic figures coming out of the US. So I don't want to, this number doesn't necessarily completely negate all of that. At the end of the day, we had hot PMI numbers. We had a hot GDP read. This is a strong US economy that doesn't seem to want to quit or roll over or die very quickly. Why does that matter? Well, the Fed is dealing with an inflationary problem, or so we thought. Today's reading didn't really allude to a massive inflationary problem. So again, where does that leave me? It leaves me strong economy, stocks not too bad. I'm bullish NAS, right? I don't have any trades on it, but this leans me to be bullish NAS. What about gold? Well, gold, I have a little bit of a gripe with. I told you I would do a little bit of gold analysis. Let's do that now. And do me a favor, guys. If you guys are part of the gold train, can we get a gold train in the chat? Can you guys just write the word here? I'll start it. Gold train in the building. Say gold train if you're somebody who likes gold. The reason I'm asking you for this is because we're trying to get a better reading on what you guys want to see more on the streams. If you're in the train, put a choo-choo in the chat, put a gold train. I don't know, put something in the chat. Let's get loud if you're a gold person as I get into this. I know a lot of you guys love your gold trading. So let's do some gold analysis here. All right. starting out, daily chart. Where does this leave us? Well, we've got an extended gold price. Price has made a substantial move to the upside. Yeah, look at you guys. Wow. Good morning. Happy Friday to you guys. Gold train in the building. You guys are here. You guys are loud. So good to have you here. Let's talk gold. So again, price extended here to the upside a little bit. Is it a time to short gold? You know, I have a hard time with that. I can't justify shorting this. Look at the daily chart, guys. There's not a lot of red here. And you guys know I like to sell in red candle environments on the daily and buy in green candle environments on the daily. Okay. Daily chart matters a lot. Because again, it's what a lot of investors use, and a lot of money that goes in and out of the markets, both gold, stocks, everything is going to be dictated by the daily chart. Now, we've extended here to the upside, and so I'm not necessarily forcing buys. And I've made this point pretty clear. I don't really have a strong bullish or bearish bias right now, but I will give you guys my game plan with gold. I think, you know, again, we've made this point several times, but let me reiterate this. As we approach that 2000 mark, this has been a psychological difficult spot for gold bulls to overcome. Every time price gets back up to this 2000 mark, it is a psychologically important level. I think if we break into the 2000 level with some conviction, meaning we get above those highs, and it might not be today, it might not be Monday, it might not even be this week or next week, but if we get that breakout, again, you've got some bullishness. If you're a strong bull, I'm going to come back to you in just a second. If you're like me, you're a cautious, maybe it could be bullish, but it's got to do something first. I need that breakout. We've been choppy here. I'm waiting for clean price action to break us out here. And then maybe I look to pull back 1996, which is my birth year, by the way. So I don't know, maybe it's lucky numbers, but we don't trade based on luck. We don't do any of that gambling fallacy in this building. We try and keep it real, try and keep it factual. But I just thought it was kind of a cool number that 1996 keeps coming into my chart here. Anyways, what I'm looking for here, a break above that level. Crack us into the 2000s, I think you start getting the attention of the crowd. And what I mean by that, guys, the crowd, if you're talking gold, gold is not something that's limited to just us day-to-day traders. If you're somebody in here who's trading every single day, obviously you're looking at gold a lot, but $2,000 an ounce, you start getting what I like to think of as the Costco buyers. You guys hear about Costco selling 1 ounce gold bars? They're selling physical gold to, I think if you're a member, you can purchase 1 Costco gold bar. And what I mean by the Costco buyers is that the Costco buyers, that's probably a lot of people who have no trading, no investing experience. They just think, hey, you know, if gold is running up, let me get some gold, right? That kind of crowd. Very, very real in the gold market. That's why when gold starts screaming higher, I have no business shorting it. I have not shorted this rally, despite at some points being bearish in it. I have not shorted it. I do not go against the crowd when it comes to gold rushes. Okay. So if we get the gold rush crowd coming in, wait for that $2,000 break, pullbacks. I'm looking for that trade, and I will keep you guys informed if I do end up taking that position. Now, I mentioned I would do something for the aggressive gold traders in the building. Again, here's the thing. If you're very bullish, we got to make a point about this chart here, okay? Or this pullback here. This level was giving us some trouble. Consolidation could not seem to get beaten down. Every time price came up here, you shot back down. You had this breakout, you held, and look, guys, you're still holding with a wick on the bottom here today with this core PCE news out of the way. Again, aggressive buyers could see a push back up to this high. Now, is that for certain? No. There is no certainties in markets. If you want certainties, don't look at the markets, right? There's no certainties in markets, absolutely zero guarantees or certainties. I mean, not even in the most safe asset in the world. If you had bought bonds 2 years ago, you're down like 50% on your money, right? There's no guarantees. Even the safest areas, gold, bonds, stocks, everything can have crazy, crazy unexpected turns. However, probabilities wise, I think gold wants to squeeze on up. It wants to retest this wick that it made going back again last week, where we had this tick up Friday. Last Friday, we saw 7 days ago, price traded up into that 1996, rejected it. So yeah, Yeah. You up 6 figures and only 27. That's crazy. Trayvon, appreciate you, my friend. And you know what? It's one day at a time. It's been a long road. I mean, I've been on YouTube since 2018 doing these shows every day. It is a passion for me, and I'm glad to share it with all of you guys. I know a lot of you guys are also super passionate about markets, and hey, you know what? More to you. Let's get this every single day together. If you're like I said, Gold Train, appreciate you guys for making some noise in the chat. Gold Chain, I love that. Listen, we got to do that more often. We get the Gold Train. Maybe we'll get the producers to do something fun for us with like a Gold Train. I don't know, like a siren or something to go off. That would be fun. Anyways, like I said, push up here, I think, is the path of least resistance. Gold is in momentum right now with a break above this 1980 level. Pretty good solid start here. I want to take a quick look at the NASDAQ here, guys, see how things are reacting so far to this push. I mentioned, and I have been very open and honest about this, I took some L's on NASDAQ. I put out a tweet about it. And you know what? I got to say something. My community has been so supportive through my terrible losing streak with the NASDAQ. It's actually been really cool. I had a lot of people rally behind me on YouTube, on Discord, because I've talked about, you know, my L's on the NASDAQ. I've been wrong. I was wrong 3 times in a row trying to catch the bounce. And obviously, in hindsight, I look like an idiot for trying to buy it. But I just got to say, you know, the kind of people that we attract on this channel, on this show, you guys are awesome. And I got a lot of supportive messages. Hey, I got, you know, people saying, hey, you know, it's been a tough month for me too. And, you know, I've been wrong here and, you know, we'll get it next month. Really appreciate you guys for that. Anyways, price broke through the lows here. This nullified my idea to be long NASDAQ. And I'm glad that I got out because it's been a bloodbath since. It's continued to go lower. Is there a bullish bounce coming? I think in November, I think we see bullishness again, and I will probably be looking to buy in November. You got some nice seasonality. I want to show you guys that. Actually, you know what? Seasonality, if you don't trade seasonality, it's a really simple and powerful indicator. By the way, we've got Jamie with the Discord community train. What's up, Jamie? And what's up, everybody? If you're in the Discord, hit us up in the chat right now. Let's get a Discord train. I don't know if you guys are in the Discord, then what's up? Say hello in the chat. Anyways, I want to show you guys a couple things here. First of all, we'll go NASDAQ, but I want to come back to gold because I know, again, we got the gold trade in the building today. You guys made yourself known. We've got October and September, not great historical years for the NASDAQ, right? Kind of ugly. Last 10 years have been, on average, poor for the NASDAQ. But we're coming in, guys, to November, which has a lot of optimism around stocks, indices, etc. So I'm looking for an opportunity. I've got to get the price action to marry up. I'm not just going to force a trade, but if I can get that set up, you guys rest assured. Again, we've had abysmal months here, 3.5% down on the NAS, 3.1% down in September. Again, tough time for the NAS. We'll keep a close eye on it going into next month. Again, like I said, I have a bullish bias and it starts to get more bullish as we turn the month's corner. And we got to talk gold here for just a second. Gold bearish bias in October has not been the case, but kind of still fizzling out for the rest of the year here. It's not the most bullish time of year. We get, however, the turn of the year being incredibly bullish for gold. So possibly is gold due for a little bit of a pullback? I guess we'll see. But again, we'll keep close eyes on all of that and go from there. By the way, I just want to say something. If you guys have not already grabbed your free copy of the EDGEFINDER, today is the last day. What are you doing if you haven't done that? Click this link right now in the chat. Send us a message. We'll hook you up with a free copy of the EDGEFINDER. And this is, I'm not just saying that. It's not, there's no strings attached. We've done a event here. It ends at the end of the day, but today is your day. We've been doing 2 days here of EDGEFINDER, free to use for everybody on the YouTube community. If you guys are watching with us live, click this link, send us a direct message using that link and ask for the EDGEFINDER free day. Today is completely free to use the EDGEFINDER. You can click around. You can take a look at the smart money. Actually, it's a wonderful day to have it because today we get the COT reports. So you guys who have the EDGEFINDER, if you click in and send us a message right now, you'll get access to today's COT report, which does drop at the end of the day. So if you want that insight, send us a direct message, click that link, get your access to the Edge Finder. Like I said, it is actually free, no strings attached. I'm not kidding. You just shoot us a message. We get your email, we send you the document, and you can use the Edge Finder today. It is so easy to get access to. It is literally, you just message us, we send you the link, and then you can open it up on your own and take a look at the data. Again, it's our software. And if you're a fan of the channel, do me a favor, even if you don't purchase the tool ever, I would love for you to try it out so that you can give us some feedback, because your feedback also really helps the channel. Even if you don't have the money to purchase, even if you've never planned to buy it, please try out our software today. It really would help us out just to hear your thoughts on what could be improved and how we can make it better for the community. Okay, so in just a second, we're going to bring in Kenzo for some ideas on possibly these markets that we keep talking about. NASDAQ and gold seem to be the top topics today. If you guys would like some gold or NASDAQ, let's get, what do you guys want to hear more about? In the chat, drop it real quick. What do you guys want to see more? And we'll ask Kenzo to do it in just a second. So do that right now. We're going to listen to our sponsor for 1 minute. We'll come right back to Kenzo from Extra Hot Forex coming at you live.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Kenzo. Hey Kenzo, how you doing?
I'm great, thanks, and you, man?
I'm good, and it's good to have you back on the show. We had a lot of people in the audience here today, Kenzo, who have been asking for some gold and some NASDAQ analysis. So I'm curious, let's get your thoughts. Which one, I guess you pick, which one you want to talk about more, and I'll let you kind of have the floor for a minute.
Yeah, both of them, it's fine. But gold, it's been actually trying to push to the upside. But mostly the reason behind that, if you still remember, since last week, it was pushing to the upside. Maybe that is because of Middle East conflict between Israel and Hamas. You know, when we have stuff like that, people actually try to get some safe haven assets that they can actually invest into. And as you know, gold is one of them. And sometimes also, US currently it's one of the safe havens. That's why maybe we see DXY also pushing up and also gold doing the same, you see.
Yeah, that makes sense in terms of a fundamental perspective. And I just want to ask you too, Kenzo. So how much further do you think gold can go off that? Do you think gold is starting to lose its momentum up here and is due for a pullback? Or do you think it's just consolidating and could totally break out and go higher? What do you think?
Currently, it's consolidating. But remember, since we broke out of that resistance, it's actually on an uptrend, which means we can continue pushing up. Because if you check back, maybe let's say if you zoom out a little bit, you can easily see that it's been selling for quite some time. So actually there is a room for another momentum. You see, there is still a room for the market to push up.
Sure. Yeah. And I guess to your point there, we zoomed out here. We're now looking at the daily chart, guys. We're zoomed out back to as far as kind of most of this year. And what you'll notice is that the high of this year seems to be that 2050 mark that we made a push up into in May, which, as a reminder for those of you guys who may have forgotten, this is right around where there was a lot of concerns about some of the regional banks in the United States perhaps going under. When that fear kind of subsided, it's gone down. Now, actually, to that point, Kenzo, we continue to see economies in the U.S., well, the economic readings in the U.S. still strong. This week, we had strong PMI numbers and we had strong GDP numbers. What that could lead to is, of course, more monetary policy tightening. And more monetary policy tightening it's not being talked about, but it could totally reintroduce some of those banking issues, which of course could also be sort of a subliminal back end pump for gold as well. So again, you've got some levels here that you've mentioned, that 2050 level. Do you think it's possible that we see kind of a end of the year push, perhaps maybe not all the way up to 2050, but at the very least, here's a question for you. Uptrend is going on. Do you think there's a good chance we stay above 2000 by the end of the year?
I think it will depend on the geopolitical news, but I don't really see, especially when we talk about Israel, I don't really see it going through December, unless if that happens. But if it continues, we can break that. We can actually break that, because just imagine those business guys actually who stays in Israel and the other country. Obviously, their only go-to asset is actually gold, so which means it can still push up higher. And besides that, currently there is nothing much that we can buy as assets. Every economy is just increasing the rates. It's just they just print everything. So the gold can still go higher than that. I believe we can still see it moving higher. I think maybe if you go like little bit like last year, I don't know where it's our high, or that is the highest area. Yeah, if that is
Yeah,
the,
pretty much.
oh yeah,
Yeah.
that is actually the highest area. I think we can reach that. I think we can reach that, even if we don't really break that that zone. But I think we are going towards that.
Yeah, it does seem like, again, to me, now that we've broken that downward structure, it's like you mentioned, momentum is now to the upside. It's kind of a tough call going into the end of the year, because oftentimes when you do see these big pushes, it's very normal to get some sort of a corrective move. I know
Yeah.
a lot of analysts thinking that it's very possible that we could kind of get that pullback down into perhaps like this 1930, 1948 kind of range, or sorry, 1940 range before perhaps kind of continuing on up to that high. So again, you've got this big push that's going on here recently, probably made an impressive amount of, or it's made an impressive move in a very brief time. It's not out of the question that we could see kind of like digestion of that move, a pullback to find new buyers to help us push through those highs and perhaps get back to those all-time highs. Now, I will say, Kenzo, I think
Exactly.
the return back to the all-time high is not it's going to happen at some point or another. Gold goes generally up over time, but I think what's going to get us above is something, it needs to be something of severe intensity. I mean, you look at this over the long term. This was COVID. This was the Ukrainian invasion. This was banks collapsing. All three of those events couldn't get us above the highs. You've got to have something, I think, a strong catalyst to actually get us above the all-time highs. But until a retest of the highs, I think that's very possible. Just may have a little bit of a pullback before then. But I guess we'll have to see.
Maybe let's say the thing is, we don't know how when are we going to reach that. Maybe if maybe on the Fed side they say, maybe are we going to cut rates in few months or the coming events, that might actually push the gold to go higher. But the thing is, we don't really know now, because they said they're not going to cut any rates, but they can pause them. If they can pause them for quite some time, or let's say if inflation can stabilize for now, I think gold can actually start to push the upside. Because if the rates are not going up, it means the dollar is not going to gain that momentum. So, which means we might see gold trying to push the upside.
Great point, Kenzo. And I think the other thing, we continue to see yields rising. Of course, guys, what this chart is telling you is this is pretty much people's expectations for stubborn inflation and for the economy to continue to be strong, and perhaps the need for more tightening. And so until that really, perhaps what you're saying, Kenzo, is that if we start to see a crack in that trend, if we start to see some come down on expectations for inflation, the Fed may be forced into a kind of a, let's back up, let's not break anything. and that perhaps that easing could lead towards a weak dollar, and of course a weak dollar could lend to a strong move in the gold market. I think that's a good point. Let's talk one more market too, Kenzo, in terms of, we're talking rates, a very rate sensitive area. I mentioned this earlier. I took an L on the NASDAQ trying to buy at this support level. It since has continued to go lower. And I want to, what do you think about the NASDAQ or the Dow or any of the indices? I guess take your pick, but indices wise, do you think there's a bottom coming in here soon, or do you think we have more room to fall?
Yeah, I think if you still remember last week, we were talking about the effect of inflation or high prices. So it start to show off. Remember, I think this week actually we had some earnings. Also, let's say until today we have some Amazon, Alphabet or Google. Some actually those earnings, they were not really nice, except the ones from Microsoft, maybe because of AI stuff. But if you check, they are not really that nice. Everything is not really as profitable as we thought, you see. So I think NASDAQ is actually getting some knock from that. That's why we show some serious sell. But mostly on the earnings, it's not going to last that long. Maybe next week we might see some reversals. But that actually has some bad effects, especially on NASDAQ. US30 is still very strong because we don't really have Microsoft and the other companies. But I think we might still see some very serious sell towards let's say actually towards until maybe next week. When we go to December, I think things might change. People, they're going to buy some stuff. I think we're going to spend more, and maybe we might see a reversal from there.
Yeah, that's a great point, Kenzo, what you said about the NASDAQ. And I'm totally with you on that because, NASDAQ has been, in some ways, it's been held on a pedestal this year. It's been up like massively while the Dow is flat on the year. You look at the Russell, which is the small caps in the US, they've just been getting destroyed. They've had a bad year, right? You've got the Dow or the S&P 500 with mild gains. The NASDAQ has been this impenetrable fortress, or so we thought, right? So now we're starting to see some fears creep in that, these companies are not, they're not completely immune to a rising rates environment, and that fear is kind of coming in and perhaps selling off. Now, I mentioned this earlier. I am looking for price action to find a bottom, to sort of form a low, and then I may be looking for an opportunity to buy. But I really like the idea of waiting for November and possibly trying to bet on perhaps the consumer to surprise. The economy has surprised several times. I think the consumer may have the potential to surprise in the fourth quarter spending that we usually see due to the holidays. So will be very interesting. Somebody said gold is dropping hard. Let's just take a quick look and see what is going on the gold chart here this morning. Again, gold still bouncing on that 1980 level. It'll be interesting to see if it can, in fact, hold this. Again, I mentioned earlier in the stream, you've got this 4-hour chart level. And as long as this price kind of closes strong here on this 1980 level, I think we could be due to retest this wick that we made, but we will have to see how that one wants to play out. I mentioned I am probably just bullish if we break through the highs due to the likelihood that would come with some sort of catalyst. But I guess we'll have to see, Kenzo.
Yeah, but I think it's maybe later, but I think it's just going to consolidate there, unless if maybe we see a breakout. But for now, it seems like the market will be playing games around that zone. So yeah, I think maybe on gold, I think we're gonna see some consolidation, because if you check back there, the market has been like just going up and down. But the overall structure, we are actually on a very nice uptrend. Maybe if we can have that retest around that zone, I think it's 18, it's 1950 or 1951, somewhere there. Maybe we can get a nice retest before we push to the upside, you see. That's what I see. So on NASDAQ, I saw something. You can go back maybe on NASDAQ. I think I see a nice resistance there. Try to zoom out a little bit. You see the support line that you have drawn there. Try to zoom it out so that we can see the whole structure. Yeah, you see where you connected the first the support. Let's try to connect it from. Nope, nope. I mean the white line, the white
Oh, the trend
support
line.
line. Yeah,
Yep.
let's push it a little bit up where you were holding it. No, on the other
Like
side.
this? Okay.
No, this side, push it lower, where to the current market. Nope, 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 nope. Nope.
It's hard to explain through.
Sorry, look.
It's all
Yeah,
good.
start it there. Okay, let's start it. You see where you were connected? We connected it before. Let's go back. Let's go back. Yes, go back
Okay.
to very closer. Yeah, let's go back. Yes, go up a little bit. Yes, go up, up. Yes, few
Like this?
exactly my point.
Okay.
I think if you
Yep.
check the structure, it still makes sense that we might have maybe a nice reversal where we are. You can see NASDAQ is trying to push the upside. That might make sense
Sure.
also.
Yeah, and you have this kind of parallel channel going on too, which makes a lot of sense. I see what you're trying to get at.
Exactly. So that's what I saw now. That might make sense if we draw this higher high, I mean lower high, lower low. It makes a nice zigzag line. Maybe that will work. Maybe if we see this reversal there continue pushing up, maybe that might change the way we see it now. Maybe that will be the next support.
Yeah, that makes total sense. And again, I think that you're probably, I think, you know, if you look at this thing from a daily chart, I think you're probably due for a bounce. You've had overall earnings that were not abysmal for these mega tech companies. It's just that, as you mentioned, everybody's been hiding out in these companies. They've been you know, they've outperformed by such a wide margin this year. And they're like these, you know, everybody holds them on a pedestal. So like I said, any level of disappointment, any concern that, you know, interest rates might be cracking their fortress is going to cause them to tank very quickly. So right now, again, I think we're probably a bit oversold. There may be due for a bounce, and I'm going to wait to see if price action kind of confirms that. If I do take that trade, like I said, I'll keep you guys uploaded here or updated on YouTube as well. Kenzo, thank you as always for coming on to the show, for sharing some insights with us, both on the technical and fundamental side. I just want to say, Kenzo, we always love having you come on the show for Fundamental Fridays. And I just want everybody, if you have not already, make sure to go subscribe to Kenzo. Here's his YouTube channel. It's linked right there in the chat. You guys can keep up with him. He is, again, a regular on the show, helps to make the show what it is. So Kenzo, thank you very much for coming on and sharing your thoughts.
Thanks, man. I'll see you next week.
All right. See you next week. Yep. Always good to have Kenzo on, guys. Again, when it comes to technicals and fundamentals, it can be a little tricky to combine them together, but Kenzo always does a really good job at bringing it all together. So, yeah. Negotiations are progressing rapidly to achieve a ceasefire agreement and an exchange deal between Hamas and Israel, mediated by Qatar. Interesting to say the least. If that is in fact kind of ongoing, we would expect gold to see some decline off of that, right? Because of course, gold trading higher on fear, lower right now on resolution or any optimism that could come in. So we'll have to keep a close eye on that. Guys, I'm going to thank you guys for all joining here on the show. And let me remind you, today is the last day. We've got the COT report coming out later on this afternoon. And the EDGEFINDER is free to use to everyone in this stream right now. There's no charge to getting access to the EDGEFINDER. If you haven't heard the news, the EDGEFINDER is free to use until the end of today. We started this 2 days back. So if you've had a chance to try it out, again, we look forward to hearing your feedback on the tool and what can be improved or what you liked about it. And also, if you have not already gotten your copy, again, it is 100% free. All you have to do is shoot us a message and we'll send you over the link. So check it out. Take advantage of this free offer. Again, you'll be doing us a favor because we do genuinely want to hear feedback from the community on how we can improve our software. We're a company out of Atlanta, Georgia. We're a small business. It's like a family environment in here. There's about 10 of us so far. And we are working every day to build tools and a better show every day for you guys on YouTube. So even if you have no intentions of ever purchasing our software, if you could do us a favor and send us a direct message right now, ask us for a copy and give us your feedback. It would genuinely mean a lot to me and to my team to get your thoughts on what we've been working so hard on for the last year and a half. So I hope you guys have a great rest of your weekend or rest of your week and your weekend. And again, please take advantage of this offer. I am genuinely asking for you to do so because I want you as an audience to see what we've worked so hard on. Even if you, again, never plan to purchase it, it really would mean a lot to try it out. So click that link. It's in the chat right now. And if you watch back at a later time, feel free to use the link that's in the description. And with that said, guys, have a wonderful rest of your week and weekend ahead. And we'll see you back on Monday. See you guys.
And that concludes today's show. Our goal at A1 Trading is to give you the latest market coverage through our daily videos and articles. If you like what you see, make sure to subscribe for more. Be sure to join our Telegram, where we host trading competitions, share free market analysis with trade setups, and have exclusive discounts to our products. Our Telegram is free to join. The link is in the description. See you all next time.